point on the list. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel less a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Fingers to the down.
All right, ladies and gentlemen, I got your watch list coming in at June 8th, 2021, and the bond market is going crazy. And I got 3 stacks that I'm looking at coming in at tomorrow, but today was a very wild day. You got the Fed minutes, and that was supposed to be somewhat important, but what ended up happening in the morning, the bond yields kept going down. We talked about this even yesterday. They dropped below 1.4 down to even 1.3, and this has a lot of implications. And then we got the Fed, but it brought about a very interesting response, and best of all, we got some data comparing all of the other FOMCs, so you could kind of get an idea of what we really saw today. But it was a very, very mixed bag. There was a lot of things going on. You still are getting a little bit of earnings, and then even next week, even more earnings, but we got a lot of other data, and that is going to set us up for the next few weeks and even the rest of this week, so it is going to be exciting. But we got a lot to go over. I want to go over what happened in the market today, what happened with the Fed, what we're looking at tomorrow, some of the company events, and then the plays that we have for the rest of the week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it's pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/thestockmarket. You can post the plays, see the plays, watch the watch list come to life, and yes, if you smile for no reason and like to smile and don't need a reason to smile, and you're even smiling right now, then yeah, we're the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, today was all about the bond yields and the data, and those ended up kind of being the main key, because after the Fed spoke, you did not really get too much of a movement. Now, a lot of people were expecting a lot of things. A lot of times people don't really expect much, and now here's a cool little chart to see. This is how much the S&P moves after a Fed meeting, and this is how many minutes after release. So the white line is the average response, the green line is a positive result and what you saw, and the red line is more of a lower bound response or a less good reaction. But today, you actually were in line here with the green line more or less, and pretty much what we saw today, within the first 8 minutes, we actually ended up. So right there in the middle, it was actually better than expected, whereas most Fed meetings, you could see by 10 minutes in, even 30 minutes in, you do get a slight change. Now, this isn't too big of a move. This is a 1/3% at max, but it is still very cool to see, and you could get an idea of how things are playing out. So a lot didn't happen. A lot of people had expectations, but it's not as if the overall move was as bad as some people were thinking. Now, as far as the Fed and what you saw today, a lot of people came to this conclusion. We even went over this with some of the analyst comments on stream, but pretty much what you got from the Fed minutes, it had enough for everybody to kind of confirm what they were looking for. So this is the main summary of it. Last meeting was taken pretty hawkish. You saw the dot plot. That was the first time Powell started talking about tapering or thinking about thinking, whatever he says. But as we got the minutes and the breakdown of how they came to that decision and what they discussed, it actually came off a lot more dovish than the actual report and the press conference that we got at the FOMC. So moving forward, it's looking like the key is really going to be digestion. We'll see how it plays out after tomorrow. Obviously, even market participants are looking at 5 minutes, 10 minutes after the release. So now factor that into the weekend after the day, all of that. But also, you are going to be getting now key CPI data and then the PPE, and that is going to set us into a new regime of data. And I think with what we got today with wages, that was the data that really sent bonds moving. That is going to be the key moving forward. Now, I will get into some of the other main points with the Fed minutes, but bouncing back to the bonds now, and that data and what you saw this morning, this was the real confusing aspect. This was the bond market going crazy. You're actually getting the bonds moving more than they ever have in the last few months. But this is what we talked about yesterday. Investors are getting worried if the yields drop below 1.4 or even 1.5. That starts to symbol that you might be getting an economic slowdown, and then it starts to wreak havoc on some of those small caps and financials. And that's what you saw this morning. The Russell was down almost 2%. But essentially, essentially this was taking over the market. A lot of people were talking about it because, again, it could be signaling some sort of slowdown, but also now, even after the Fed, it is very contradicting to see rates come down when the Fed is saying we are upside inflation. Everyone's talking about inflation. The bond market is really disconnecting, and that's kind of good because that correlation is coming back. But now it may seem like a lot, but you could see this chart visually. This is the 10-year bond. You don't need a crazy chart to show you, but you could see here anything below 1.45 or even 1.5, it is a very, very big deal. This is going back. Last time you saw that was pretty much Brexit, the pandemic, the first time we cut rates in 2019, and then bring it back down to the Euro crisis 2012, really 2 years after the biggest financial recovery. So this is a very key level, and that's why now all of a sudden, I mean, you see the trend. The rates were going back up. So for them to drop and now drop below this level and to do so with this speed, this is where the bond market is starting to freak out a little bit, and this is where you got to pay attention, especially on the mid to long term here. So that took over the show today. That is definitely what we're going to be watching. Again, you've seen the bonds. It could slow down, but we'll see what happens. As far as now back to the Fed, the main keys and some of the main points that were talked about that I got out of it was talking about mortgage-backed security tapering. That's the MBSs, and what they discussed was tapering those first instead of the treasuries. But now what you saw in the minutes, they discussed that that is very contrary to their goals because that is not what they've communicated in the past. They said that they would pretty much do both at the same time, or if anything, the treasuries would come first. So this is definitely going to be a talking point moving forward as people are kind of getting this idea, and you get to see where the Fed's head is at because they're now even talking, and this was the first meeting, the first FOMC, where they said real estate prices are kind of concerning. So there was that, and then as far as inflation, they said that all of their estimates are skewed to the upside, but they did say that most of the negative effects of the virus and what it has been doing to the economy is pretty much dissipated. They even said that's why they are removing certain terms or saying extraordinary hardship and other things like that. So that was another key, but there was a lot of different stuff going on. But overall, this is to the point. It goes hand in hand with tapering, but everybody could have read through the minutes and been able to say, I told you so, no matter what side of the coin you agree on. And that's what we talked about this morning. What you're watching with bonds is kind of sticking you right smack dab in the middle of this year, which is pretty much saying you don't really know what's going to happen in 6 months. Is it inflation? Is it deflation? You are really right in the eye of the storm of transitory or not, and that's what is affecting the market here. So there was that. As far as everything else, this is another cool chart I want you guys to see. We talked about this. This is on the market OTC stocks that are publicly traded, but then there's also OTC companies that cannot be publicly traded or are not really on the public markets. So some analysts have pointed out that those are kind of peaking out here, whereas the OTC markets on the general public have already peaked in February. So this is kind of now starting to point to the fact that small cap momentum is slowing down, and tie that into bonds and the rates in the Russell, then it's kind of telling you something there, if anything. So those are the main points. We got a lot of other stuff this week, but it's mainly going to be digestion. But now as far as the company news, there was quite a lot of different things here. The first one that we got this morning, it felt like a blast from the past, but you got Trump. He did a press conference and he is suing Facebook and Twitter and their CEOs. It's kind of a long shot to say that those companies will actually get affected, given there's been a lot more drama and heat on there. So we will see what happens, but immediately no effect. And even in the midterm, it's not really expected to do much, but we will see what happens. Then there was NEGG, N-E-G-G. That is Newegg Computer Supplies. You guys have probably heard of them, but no one is really talking about this thing, and it's been killing it. So be careful. We saw it at 11. I thought this was important, though, because with the small caps down this morning, this really looked like the only hype stock. So that was very interesting to see. Then we got two back-to-back pieces of news today from Amazon. They announced a new advertising partner network. It didn't really affect this stock. And then a little bit before that, there was also news that Amazon approached Aetna, which is owned by CVS. You even saw Walgreens have a pop, but it was regarding a healthcare deal with their healthcare services. They wanted to get help from Aetna. So that affected those healthcare stocks, but not really Amazon. Then after hours, Google got sued by 5 states about the Play Store antitrust case. It is expected to get filed as early as tomorrow, so we'll see how that plays out. And even tying that into the Trump stuff, there was a lot of articles today just highlighting that, yes, there is increasing antitrust risk and all of this political drama with these social media companies, but looking at their performance, they have always outperformed. However, it's been a while since they used to get clapped. I remember back in like 2015, 2016, they were a little bit more susceptible to some of those lawsuits, so there was that. After hours, another lawsuit, DraftKings and Game, the stock is Game. They are suing DraftKings over a patent lawsuit over something related to synchronizing live TV events and betting and like the latency and all that. So this is going to be interesting. I have this even in the plays, but that came out. Overstock also got a price target after hours, a $150 price target, and a conviction buy at Needham. Overstock currently only has 5 buy ratings, 0 holds, 0 sells, and the average price target is 129 across all analysts. So not really covered too much. And the person who gave this update, and I believe the other stocks that they were covering was Etsy and RealReal. So those are the only ones, kind of puts it into perspective a little bit. But otherwise, the stock jumped after hours, and even during hours, Coinbase got an upgrade. It sent them flying, and the upgrade was related to the stock, but as well as even the outlook for Ethereum and some of the crypto. So that was really good. But coming into the rest of the week now, you're going to get China PPI and CPI on Friday. That could have some effects. We will be watching the currencies, or that could even just set us up for a lot of the data coming in the week after that. Friday, you're getting the G20 finance ministers and the central bankers. They're meeting in Venice. And then a little bit more after-hour news from today. Morgan Stanley upgraded Ferrari based on the EV market, gave them a $350 price target. So I believe they've been underperforming a little bit. So that one's interesting. Another one, Democratic Rep Tom Malinowski, he made a statement on Bloomberg saying that the China competition bill can actually be used to respond to Didi, and they are looking at ways that they could do that. It all just depends on what they want to do. So that's an interesting one. I want to keep my eye out for that coming into the rest of the week or even next week. And then finally, another cool data point and chart, but refinances. So this is going to affect Archite and UWMC, but even with the rates coming down now, you're not seeing the amount of refis jump up, and this has a little bit of cause of concern. So you could see when the rates were at a record low, you had a very, very big run up in refis, and you could also see how it plays out. As rates were dropping, you would see a slow increase in refis, but now that's not really been the case here. So we will see, but then at the same time though, rates have to go a little bit lower. But last time they were at this rate, they were actually increasing a little bit. So you are getting a little bit of a lag there. But that is pretty much it for the events. We still got a lot. I'm sure we will not be surprised by the digestion. You need to keep your eye on the bond market. It is saying a lot, and you are in the eye of the storm of transitory or not. So I hope you're ready. But that is pretty much it. So let us get into the plays. So, right off the bat, I got 3 different plays that I'm looking at coming into tomorrow. I did not make any plays, which is a little bit surprising, but the first one, it is related to a play that I closed out. We'll go over that. We closed out of the Oracle play. We bought those for 30 cents. I sold one out at $1.40. I think they're worth like $2.70 now, but I grabbed Oracle the week before Honeywell, and I liked it because now Honeywell's premiums are holding up, and it's kind of one of these plays where it could be a value play. It's been one of those Dow plays, but it is also kind of moving in the middle. And with the last few days, it has held up very, very well. So just looking at the premiums in general, I really, really like that one. As far as the play that I'm holding, it's just the same one, September 260. I have 20 of them. They're holding that 36%, and they even went down today with the stock doing pretty good. So this is where I'm like, okay, this one's going to get a little bit interesting here, especially as we start getting into the earnings and how the market is moving, small caps, big caps, all of that, and bonds. I think this one is going to be a key one to watch, so we'll see. But I already have a position, so I'm not going to get too jumpy or greedy. That's the first one. The second play I want to look at tomorrow is going to be DraftKings. And really, I'm just looking for a bounce play on the news that we got after hours. Again, that lawsuit, it sent the stock down a lot, and it even sent GameStop, the company that's suing them, they shot up. GameStop, not GameStop, G-A-M-E ticker. Okay. But I think that one could be a little bit overdrawn. Again, just the nature of the lawsuit, I don't think it will affect them too much, even if they lost. But overall, this could be a good pickup opportunity and create a little bit more of a window here coming into earnings. So I really, really like them. And then finally, Overstock. So we've held this one for a while. We got in the long term. I like it. And pretty much I'm looking for continued momentum with that upgrade. It usually reacts to stimulus or catalyst very, very well. So if that could get us that momentum back towards that $100 level and get back to those bigger candles, that will be good. Otherwise, it's probably going to flop and then go back to trading till normal up until we get the earnings there. So very straightforward, not too many plays. Again, the market was all over the place. We were waiting for the Fed and all of that, but as far as the plays that I made, there was only 2 that really stuck out to me, and the first one was this Oracle. You see here, we got those 85 calls, July 16th expiration. We bought these ones, I believe, June 16th, and this was a play that we made around the same time with the Amazon. The whole idea was we held it, but I only bought 2 of these for $60. So it went up. It's still holding 500%. It was close to about 1,000% in the day. The stock came down. I sold one of these. I could make it free, but this was a double dip on Oracle. So if you remember, we played Oracle with this run up. We even had old plays that came back to life, I'm pretty sure. We got a nice couple 100%, took profits. Then the earnings came around. I held one contract. Then those got expired. That was a June 18th. So day after earnings, the earnings was very, very good, but they sold off. So I bought it on the earnings date. I was looking for the continuation in double dip, held it all this time, and then it finally broke out and shot up. So the key with this play and the logic, there's actually quite a few, but the main one, why did I do it? It was an earnings play. The earnings was good. It was an overreaction. They sold it off. We've shown this strategy of playing some of these plays on earnings because that's where some of these good contracts might get cheap, but I bought it and I actually lost on that play. So if you were watching the watch list, I brought that up. I remember I told you I bought it in the morning, got clapped instantly, but now sticking to the strategy, I held it out. And why was I able to hold it? I only spent $60. So kind of like that Weibo, I spent a little bit more on that one yesterday, but you could see with some of these plays after news, a continuation, you could scale in very small. And the idea is a lot of things could happen with time. You could be early, you could be a little bit late, but if you keep it as a small play, you will be able to ride it through. And this is a very important point, because somebody asked me, they're like, wait, Josh, I got the same exact play. I bought it when you did, but I sold out for a loss. And the number one thing I asked, or the first thing, it was how much money did you put into that play? I put in $60. They told me that they put in $1,500. So it makes sense. If the stock or the option gets instantly clapped at $1,500, you're going to be inclined to want to cut out of that, take your profits, walk home, say, okay, the play didn't work. But by keeping it small, you're able to ride it out. And you can see turned into a pretty decent trade. So that was the first play. The second play I was considering was Amazon. Again, this play's still worth about $5,000. It shot up another $400. It was up another $1,000 today. And what we talked about was using the ghetto spread appropriately. So somebody asked, even with the other plays, even on Oracle, they had it. They're like, I want to do a ghetto spread. Even with that final Oracle I'm holding, I could go about and do the ghetto spread. If you don't know what the ghetto spread is, you take a naked option, an option that you bought just like the Amazon. I bought the call, it goes up in value, and then you short another option, turning it into a debit spread. But since you bought the first option for cheaper, you're able to collect more credit back, and that way you get all your money back, still have upside, and you could still keep your hand in the cookie jar. So the main thing that I wanted to bring up with that is you have two options when you're doing this. So this contract is worth $5,300 right now on the bid. If I sold that, I would get $5,300 into my account. About $3,000 of that is pure profit. $1,500 is the initial investment, but I already made the first contract free and recoup my initial investment. So your two options when deciding which contract to sell, I look at it like this. Do I want to sell and get my profit? So if I'm up $3,800 in profit, I would sell the $4,100. That way I collect $3,700, $3,800, get all of my initial investment plus the profit that I'm up, and then I still give myself upside while sacrificing that $2,000 difference. Or the other option is you go to the one that was your initial investment. I could short the 4,400 one, get my $1,500 back, risk the rest of the profit, but now I could have more upside if Amazon does indeed go crazy. So keep that in mind. A little bit of strategy as far as everything else. Going to be watching Oracle. Really like that one. Coinbase in the upgrade. It was a big move, and this is kind of moving a little bit different. I mean, if you really just take out the first 3 weeks of the stock, you'll be able to see it has been moving a little bit differently, but especially here, we'll see what happens. Crypto has been doing good, so if that continues, that one will be really great. Watch Walgreens. The premiums are still holding, but they are still dropping now at this point, and it's getting to a key level. I'm really either expecting a big bounce or it's going to hit one of these levels and then bounce around again. The best part is they have already had earnings, so they're probably just going to be more reactive to the market in general. So however they perform from here will be very, very key, and that's what we want to keep our eye out for. So watch them. Watch Weibo. It popped up out of nowhere today and then started a barcode. I really like this. The premiums didn't move, but I think I might be too short on the time there. I still think something is going on there. Totally speculative, but I still like it, and it is a Chinese company, so be very, very careful on there. Overstock, like I said, this one I think is going to be really good. The question is, are we going to get back to that breakout level, and is it going to start moving big, or are we going to start getting kind of some of the more slower candles up, slower candles down? But overall, it's doing good, and I think it's going to set it up really nice into earnings. Starbucks, I really like it, kind of breaking out here. And like I was saying yesterday, you kind of have it moving like one one of those names in the middle. The premiums are up about 60-70% from yesterday, so I really like that. Going to be watching them. Moving on to the next chart, DraftKings, like we said, watch them game. This is the company I was talking about, so I think it's just an immediate reaction, but I think with overtime, again, I think DraftKings has had more negative press than this one, even though this one is a lawsuit and not necessarily an opinion. So anything can happen with that one, but I'm going to be watching that one. I think that one's interesting. Watch Newegg, like I said. It is moving a lot. It keeps going. We saw this one early, though, so be careful, but I'm viewing this as a hype stock, and they kept halting it today. You haven't really seen that on the upside in a while, especially not being a biotech, so we'll see that one. Speaking of biotechs, the IC play from yesterday, it's came back up here a little bit. You're still seeing a lot of good FDA approvals, and for this thing to keep going after FDA approval, I really like that. Just think Nutella, Intellius, or whatever. But if it does something like that, I could like it. Obviously, not as crazy and not as groundbreaking of a drug. But watch them. Apple came up to record highs now with some really, really crazy option volume as well, too. This was a big leader. It's still going. You got a lot of eyeballs on it now, too, because, again, they've kind of been in the middle. This thing is actually moving like it is Amazon. So this could be a good one, and the options are a little bit cheaper. So watch them. Watch Amazon. Gave back a little bit of steam here, and be careful now because you did see one of these big days. But remember, we've played these streaks out here. So lately, how Amazon's been moving, the question is it going to start moving with everything, or now do they start to slow down and does everybody start to catch up? So keep your eye on that. Shopify still have that other play. It kind of moves more like Amazon in general, but watching them. And then finally, TLT. I already showed you that 10-year. This is just an important level. There's a lot of things that we could say, a lot of things that we're going to assume, but as long as it keeps showing and doing something, we will really be able to get a signal and trigger from this. But the question is, how low do the rates go? Do they stay there? And then now, how is any other future data going to reflect that? But you also saw a move here today with the dollar as well, and this kind of eased it a little bit, but the dollar did go up with the bonds shooting up, but clearly the bonds outpaced in TLT. So the main key, the main question now is, are the people with the money freaking out? Are people rushing into bonds now out of anything they could buy with inflation, all this stuff? Why are the yields going down? And if this is now becoming more attractive and there's a reason, we might be able to see, and this could signal the shift, and you really might be able to see TLT snitch. But right now, this is already concerning, and this is just something that you want to keep your eyes out for. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to know you don't need a sign. Just look in the direction you're going, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.